got ourselves a little sideways action, very quiet in most of the markets, except for dollar yen making a new low. That continued underperformance is coming through with dollar yen. It's really struggling to find a reason to go high and hold those gains. It's even struggling to go sideways, and that's noticeable, and it's helping keeping the US dollar under pressure. And one of the pairs which is taking advantage of that, not the majors really, but the Aussie is taking advantage of that, because Aussie's been short squeezing all week, ever since last Friday's NFP number. The Aussie's been well beat on dips, and we had some nice Chinese data helped along the way. A bit of a stop out of some of those shorts here helped along this way, and then finally we got the long-awaited GDP numbers coming out today, and they were slightly better than expected. So the short squeezes continued with a little bit of earnest. You know, this is now pretty high levels for the Aussie. This is like, if you told me last Friday that we were going to be able to sell the Aussie in 3 days at 75.50, I'm like, okay, how did we get there, right? And so it's just a combination of three pretty key pieces of data all coming in better than expected, and the US dollar remaining weak, and it's and a bit of opportunism from the bulls to squeeze some of these bears. I don't think the longer term outlook for the Aussie has changed too much. I think downside is much more likely than topside, but I definitely can't justify selling again. I'll stop out on that GDP number anytime soon, until we get some price action which warrants it, or a piece of data that, or just some news out there that the market wants to run with. It's really lacking follow through. So the bigger long-term trend and range, the bigger long-term range is back. We're right back in that 75, 77 range now, and that range, while it did have a dip down earlier in December, January, it did come back up quite quickly. Let's have a look at it from last year. It was just going around for since July all the way up to November. It was really just sticking around in that 200-point range, and perhaps it's a bit more comfortable up there. Now, we remember when we were selling the Aussie down here, we were a little bit worried about this trend line. We talked about that trend line break and getting down to 72. Well, that trade is off the cards at the moment. Can't really get involved there. Perhaps if the US dollar can find some stability and some sort of support in the DXY, and we get some sort of extra negative news that opens up the door for the RBA to cut, we can talk about a move which will push lower. But it seems like iron ore alone is not enough, and housing wobbles in Australia is not enough. We need some concrete negative news to get the market, the FX market anyway, ready to push through some of that support. It's a really frustrating pair to play at the moment, unless you're a range trader, and then you think it's the easiest pair in the world. Buying down at 74, shit, that's pretty cheap. It's going to go back to 75, keep on orbiting that level. It's a very, you just got to respect the range. You can't really no other way to put it. You respect the lack of follow through in it. Now the pound is showing signs of strength as well. Now, if we didn't have the UK election, one wonders where the pound would be, right? Given the weakness of the US dollar and the strength in the euro, I suspect the pound would be 132, 133. And this speed bump in the UK election, if May can win with a little bit more majority or the same majority, just win with the majority, I suspect we are going dramatically higher in the coming week. But that's under threat. Yeah, that's definitely under threat. The polls are tightening, and she seems to be a bit unsteady into these final days, and lashing out. Her response to terrorism is that we may take away some of these human rights. I don't know if that was the right tone to take, and we'll see. It's a really hard sort of election to pick because it's so tight, and the momentum is against her. So this scenario is one of those situations where anything could happen. When a leader's such a big favourite to win, and then the polls tighten towards the end of the race, you're not sure, and there's big event risk, like the big events that happen, terrorism beforehand. Perhaps it does swing some of the voters against the incumbent, and so we'll find out come Friday morning when the exit polls are out how she goes, and that will be some big moves coming here on the pound. I think the downside will be open to around 126, 125. I don't think we can go lower than that if it's a hung parliament, but it doesn't help. It doesn't help in that scenario. It makes it really difficult to buy that dip, regardless of how bullish you are on the pound. And we might go into selling rallies in that mode. And in that scenario, the euro pound's probably heading towards 90, and we'll have to be following that trend. And whether we're going to be buying euro pound if she does badly, how we sell the pound is determined upon the Comey testimony and the ECB, how dovish the ECB is compared to market expectation. What the market wants is taper talk, and it wants taper talk, and it wants acknowledgement of improving economic conditions in Europe, and that's why we're at 112.50. If we don't get what the market wants, and Draghi notes concern about sustainability of inflation, says we're not ready to give a timeline on tapering just yet. We may wait for the next round of economic updates from the ECB in September. Then the whole euro trade might be delayed significantly, and then it makes it much harder to buy euro pound because the ECB is the first event. So tomorrow at 10:30 we get the speech from Draghi, and then at 12 o'clock at Sydney time, I'm talking now, an hour and a half later we get the Comey testimony beginning, and then about 3 or 4 hours later we start to get exit polls from the UK election. So the first thing you need to sort of react to is how Draghi plays it and how the euro reacts, and depending on what he says is whether we're going to keep buying that euro dip or we're buying that breakout above 113. There's a possibility that we're buying really high tomorrow if it looks like it's all gun blazing, and depending on if Comey comes out, what he says is we're buying euro USD or we're buying euro yen, and then depending on how the elections go in the UK, we might be also buying some euro pound. And I'm going to go into a bit more detail tomorrow when we do the live ECB together, probably about which way to play it and what what the result is of Draghi's speech. And but basically there's three big events. How they all pan out shows us which is the best pair to play. And we're going to be picking the weakest pair versus the strongest pair of these three, and trying to get a continuation of whatever move begins for the next couple of weeks. So it should be exciting times. I don't think you should be afraid, given the size of these announcements. Each of them is so important. Which way we go, I don't think you should be afraid to hop on relatively high levels if it's indicated that everything's panning out that way. The euro, there's scenarios where the euro in a couple of months' time is at 120. Right, there is an outcome tomorrow where that sets the groundwork for that to happen. In terms of where I've set my limit order to buy the euro, it does look a bit ridiculous. I'm looking to buy the euro at 110.50 still. That's just, I'm leaving that order there just in case it gets filled. Draghi comes out, delays everything, and I think the market can pull back towards 110 within 24 hours. But that's ambitious, right? That's pretty ambitious. So what do you do today? Well, you try and square up, you try and get out of positions. Given that the Aussies move so dramatically, it's actually gearing up some reloading in some of those crosses. So if you're looking at some of the crosses here, the Euro Aussie is starting to roll down, and it's got a little bit of room to move still back towards that 147 level. And if Draghi comes out, talks it down, then we can look to buy. If you're bearish on the Aussie, it's not a bad way of getting long, of selling the Aussie by getting long the Euro Aussie on a dip, especially if you believe that the Euro rally has legs. And also, the pound Aussie is rolled over, and it's coming back down sharper. And it's post UK election, this one has ability to return to its top trend as well. And it could be at really nice levels if the Aussie was to continue to rally, and that could look, you probably get, if May wins by a strong majority, then you probably see a very nice wick here coming tomorrow on the daily. So we'll keep an eye on those two. They're outside chances of being traded, but I'm a little bit bearish still on the Aussie. I just don't want to sell Aussie US because the US is so weak. And now Aussie Kiwi has failed once again at 105. This is a second test though, so you've got to be a little bit more patient, I suppose, to see how we play. If we can build a base above 105, then perhaps the Aussie Kiwi will get squeezed. And in that scenario, this will mean that the Kiwi becomes vulnerable. Okay, the Kiwi against the US, or just Kiwi in general. And there are scenarios where this strength in this cross means that instead of buying Euro Aussie or Euro Pound Aussie in coming days, we buy Pound Kiwi and Euro Kiwi. So that's another way of playing this. Dollar index, where is your support? Do you have any support? It's a Trump rally. That's pretty close. So US 10 years are coming back down to some pretty key levels as well. If they break down further, they're probably going lower. That's going to drag down dollar index. Yeah, so look, this is important when you're looking to buy something like dollar yen. You want to see some basing in the dollar index before you buy dollar yen. And Comey is probably a big part of that. If Trump can get the Russian saga behind him, he can start to focus on things that are important. At the moment, though, he's not. Gold is an interesting pair. It's really, really strong. Now, why is it so strong? Is it just US dollar weakness? Is it, underlying concern about Trump? Is it underlying concern about this Gulf states fighting each other, or starting a diplomatic spat, a pretty heated one that could turn into something more? Is it just demand for gold's outstripping the sellers, and on a daily basis right now it's really a substantial rally, and we're back up to that 1300 level, and this better fail. If you're selling gold, you really want this to fail sharply right soon. You don't want it to stabilize above 1300, because this bad boy can keep going without much at all. It's rallying when stocks are near all-time highs. It's rallying without impeachment. It's rallying without a war. You know what I mean? It's rallying by itself. It's pretty strong. Bitcoin's going crazy as well, and Bitcoin and gold have a relationship, and dollar yen selling and gold up has a relationship. So everything looks like it's geared up for the break higher, but I don't know. When it doesn't make sense, I don't like to chase. Now, apart from the chart saying buy, I don't understand why we're chasing this. It seems both the dollar yen sell-off and the Bitcoin rally are a little bit overdone. I think Bitcoin broke 3,000. Last time we looked at it on this stream, it was only a couple months ago. It was like 1,100. That's crazy stuff. That is just not for the faint-hearted. What's he short there, Potter? Short Aussie? It's not a bad trade. I think it smacks of rubbish, right? This rally, this short squeeze. What are we selling? He's got a lot of trades open, doesn't he? I think those are hedges on the gold there. Long some pound Swiss makes sense. Ooh, he's heavy in some pound trades. How's this account looking? It's a nice return, isn't it? It's done quite well. Yeah, but he definitely doesn't want UK elections to get a negative result there, looking at that positioning. So yeah, tomorrow's going to be huge. Next 48 hours in the market. I told you yesterday, the ranges in the pound yen is probably 800 to 1,000 points, and it's I'm not just trying to talk it up. I really think there's that the scope for that sort of move. Let's see how the analysts reviewed the The banks reviewed the Australian data today. Got Goldman Sachs coming out, solid outcome in context. Widespread speculation of a contraction. Everyone's talking about potentially going into recession here. That seems to be delayed at least by 3 months until we get the Q2 numbers. And some of the internals are pretty strong from what I've read in most of those reports here. Barclays. Q1 was soft in terms of compared to Q4. And they've lowered their 2017 growth forecast to 2.0. Despite slowdowns, a few positives. Growth in household income. Private non-mining capex increased. In our opinion, RBA is probably relieved by the Q1 GDP because RBA is everything, right? If RBA turned dovish and opened up the door for rate cuts earlier rather than later, then you could get those scenario where we're going to 69 in the Aussie and Aussie Kiwi below parity. But it looks like we've got a little bit of time here for that to happen. And the next move from the RBA is still now likely higher rather than lower. If you're looking at the balance of expectations, and that's Q1 2018. And finally, Deutsche Bank, what do they say here? Aussie Trade Weighted Index has done well over the past week. Q1 data hasn't disappointed expectations. RBA has retained a neutral tone on yesterday. Nevertheless, the detailed data does look Aussie negative for the medium term. We remain hesitant to sell it against the US dollar at this point. I like selling it against the CAD though, okay? Aussie CAD is something we haven't traded before here on the stream. It's definitely can become a good trade if you can see disparity between the two economies. Canadian dollar though is, I'm not really an oil trader, so. And it moves a lot during the US session, and that's when I'm sleeping most of the time. So I've never really got savvy with CAD and the CAD crosses. I'll move on to something else here. Look at some of the global UBS Global Trading Desk views, ideas from the traders. I haven't read this report before. Alright, long dollar yen, 109.60. Okay, I'm open to that idea. Euro's had a significant rally. They're trying to sell the euro here. Since the French election, there's still risk on the horizon, including elections in Germany and Italy. Combining euro downside against emerging markets. These are option trades. These are something you can't really do with your broker. The broker I work with does have options, doesn't have the ability to make these significant ones, so these sort of knockout options. Alright, Basically, they don't think the Aussie's going lower. Okay. Oh, they don't know. They do think the Aussie's going lower. Sorry. Interesting. I have to talk to my mate. He's an options trader to get the full understanding of this. This is straight up. They're not trying to help out retail traders. Jesus. FX exotic options trader from Singapore. Can you settle down a little bit, Pearson? Right, we can't buy a gold dollar yuan dual digital, okay? Right, maybe you guys can at UBS. Golly gosh. Alright, we shall never read this report again. Not unless they start giving us more sensible trade ideas. Let's read some Brett Donnelly. He's a bit more normal. He usually has some nice views on the market. Doesn't always get it right, but it'll be interesting to see how he feels here. We'll see if Jim Reed's got something out for us as well from Deutsche Bank. Alright. Strange combo. Stocks at the highs with gold bid and crude, copper, dollar yen yields near the lows. It's a very strange combo. He's looking forward towards next week's US CPI number. Now that CPI number comes out, let's see, it comes out before the Fed. Nothing's happening on the Trumponomics front. Oil's unchanged. Global inflation data is looking toppy. Okay. This is a chart showing a relationship between the SPX stock market and these red lines are when gold, you know, when the stock market's near 100-day highs, and gold, stocks and gold near 100-day highs, but crude, copper, dollar yen, and US yields are near 100-day lows. And right now, we've got a very extreme reading in that, so he doesn't think it's going to be normal. I mean, generally, it's not normal what's happening right now. It's definitely a weird scenario. Things being so good, but dollar yen being so down is not your standard setup. If you told me 2 months ago stocks were going to go all-time highs and dollar yen wasn't going to go with it, I'd be like, oh, okay, is the Fed not raising rates? No, the Fed's raising rates. Oh, okay, something bad's happened. That's no, not hurting stocks, but hurting dollar yen is Japan. You know, coming out of its long period of doing nothing. I'm like, no. And it's like, well, okay, well, what's gone down? It's hard to explain it. Something's changed. The correlations have changed. You know, so what that means is what? Do we buy dollar yen and think everything's going to go back to normal? No, you'd be cautious. You'd be very cautious that something's up. Right, in the bond market anyway. I was talking to a bond trader the other day and he thinks it's wrong. He thinks that the bonds are going to start to, yields are going to go up again. He basically thinks that this is just a mechanic of 6 years of bond traders selling every rally in yields. which means buying every dip in the bond market, and that's going to come to an end soon. Perhaps we need something like the Fed, trying to get out of its balance sheet, something to get yields to really rally and hold. If US yields 10 years to go back towards 2.5, then dollar yen goes back to 120. But right now they're at year lows. Most people's views of higher yields, including ours, is failing to materialize. So there was this news last night as well. ABC reported James Comey will stop short of saying President Trump sought to obstruct a federal probe. We sort of heard these rumors coming out from the White House as well that they're not worried. And that sort of means that they know what's going to happen, right? You should be worried if you don't know what he's going to say. So if they've sort of sorted it out in back channels, then it's that leads into thinking more along, looking for risk on euro yen, pound yen, dollar yen long trades. All right, that's the if we're talking conspiracy theories, that nothing happens in US politics that's hearings anyway that isn't known beforehand. Perhaps I've been watching too much House of Cards. And before this UK election, so tomorrow, there's going to be heaps of polls in the morning. So those polls in the morning are going to be interesting. They're the final polls. About 5 of them come out. Alright, and 90% will be known by 6 a.m. BST. BST, let's check BST time. So Friday, come Friday, mid-Asia, we'll have the result for sure. Current time is 10:30 a.m. BST, so you're thinking 4 hours ago, 4.5 hours ago, they suspect everything will be here out on Friday. 4 hours goes from 4.5 hours from where you are now. 6.5 hours, 50% should be voted. So for me, that's 1 p.m. Sydney time. Alright guys, so yeah, I'm going to do this stream live on the ECB tomorrow. It should be a very interesting sort of meeting because expectations are so high. Now I'm suspecting that Draghi's going to come out with the old dove stick and just start beating down the euro. And the interesting thing for us is what he says, what the update is, and whether we can buy that dip and how we buy that dip against what. I'm looking at buying euro yen dips. I'm looking at buying euro USD dips. I'm not too convinced about euro pound, and I don't want to play it before the election either. But those are the two ways I'm looking to play. So early preview. Alright guys, good luck with everything. I'll be back tomorrow just before Draghi starts to speak. So that's a little after the ECB announcement, right? The ECB announcement comes out, and then Draghi speaks a little bit after. The announcement's not the big thing, it's the Draghi speech usually.